Hi, this is Jim Robinson with ProfitTraining.com. I hope you're having a great day. Now, we're looking at the DIA stock market. This is Dow Jones. It came up here and it made this big high and it made a bearish divergence on the MACD, and the MACD is hooked down. I really think it tops in for stocks. I don't know what else to say. I mean, as usual, I could be wrong. Anybody can be wrong, but when you get this exuberant buying and then a slam down, and then like yesterday's action, I don't know if you listened to my video, but I said that really didn't do anything for me, even though it was a big update. Just because that's the way these market tops are going to come in, and on a lot of selling and buying, and now today it's collapsed below this low. We'll see what the rest of the day holds. I mean, of course anything can happen, but it's just it looks like a top is coming in here. So I the biggest thing is be very careful. Um, okay, Qs. For some reason, it's not showing today's bar on the Qs, but that's okay. It's just another one of those things. It's just the market came up here, made a new high, and then it's collapsed. That's a drastic change in sentiment when it makes this big up, and then all of a sudden a slam. I mean, that's telling you the sellers have taken over. So that's about all you can say. It's just classic chart reading. Same thing with the S&P. Again, we can put the momentum indicators on here, but you really almost don't even need to see them. You can just tell by the chart action. But the stochastics, see how that's put in a bearish divergence there as this came into the new high in this stochastics. Right now the momentum's down. So I would not want to be long this market at all right here. And then, you can start drawing in classic trend lines, and as those get broken, you know, it'll be more evidence. I mean, that's why we take this day by day. I mean, if I see something the next couple of days that changes my mind, I'll let you know. But I mean, I'm just calling it like I see it right now. I think you're going to start seeing breaks of support and everything else in here. So we'll just see how it plays out. Right now, I think this is the top in stocks, and then it's going to come down and it'll come back up and test. It usually makes that first sharp move down, comes back up and test. Then it keeps going kind of sideways, and then it'll crash, and then everybody will go, "Yeah, that was the top in stocks." That's just the way these things play out. So nobody sees it as it's happening. I mean, I can't say nobody, but very few people see it as it's happening. But 3 months, 4 months down the road, it'll be um, evident. They don't ring a bell when the top comes in. I've said that on about every video here. I mean, look at Starbucks here. You know, draw just a classic resistance, poked its nose through there, came back down. This is a spinning top if you follow candlesticks. This isn't a candlestick chart, but that's a spinning top when it does that. Slam down again, drastic change in sentiment. It hasn't really broke down, but these inside bars are just the bulls and bears tugging it out. Now again, momentum, MAC momentum divergence. It's going on a sell signal. I think Starbucks is heading lower from here. Basically, I'm going to be selling this in my premium newsletter. I'm only selling in my premium newsletter right now. We sold KORS yesterday, and it's gone a little bit our way, and I'm expecting that to keep going down. This is another one. What I'm doing in the premium newsletter, I use the track and trade software, and of course I look at a lot of other things, but this is one of the main things I look at. First of all, the bulls and bears. Let's see. Okay, these advantage lines, you can't see them real well. I could make them thicker, but I think you can see them good enough. Basically, there's a blue line here and a white line, and the blue line is above the white line. Now, when this goes on a sell signal, that's advantage lines. That's proprietary to track and trade software. That is a really good indicator for market turns and things. So I look at the advantage lines, then I look at this bulls and bears, green bullish, yellow neutral, red bearish. When this puts in a red bar here, I'm going to be going short. And then I do look at some other things. I look at momentum, and track and trade has lots of indicators. I just don't want to, I don't have time to show them all to you right now. But, well, I mean, we can look at them. Chart overlays, add indicator windows. Okay, it's got Williams, accumulation, average true rate, Bollinger Bands. So, directional movement, gator, all the way down. It's got all the indicators. This ribbon's really nice. I can put that on the chart real quick so you can see what actually, this can go down here or up here. Now that's still showing an uptrend, but naturally when it's at the top, it's going to show an uptrend. But then when this starts rolling over, that will be bearish. So this has got all kinds of indicators to look at. Quailcom, that's another one. Look at this. I mean, that's a head and shoulders top. I don't know what else to say. I mean, it might not be, but I think it is. You know, you can draw all kinds of trend lines on here, however you want to draw them. But anyway, the main thing I do is I look at the chart patterns. And again, this is interesting. Because what people do is they get caught up in the emotions and the exuberance. Look at how these tops come in on stops. Big gap up, big buying. Big gap up, big buying, and then all of a sudden slam. That is again a drastic change in sentiment. Tops come in when on exuberant buying, and this stock, I think it's made a top right on this bar here, on this big gap up, and then the next day big slam down. I mean, what more? I mean, that just tells the story right there. And now it makes this slam down, comes up, makes this test. If we would put Fibonacci on here, that's probably like a 0.618. A lot of times this first test will be a little higher, I've noticed. This is probably like a 0.78 test, which isn't on here. I've noticed that a lot of times this won't necessarily be a 0.618, but that's still a Fibonacci retracement there. Okay, so now, okay, let's see what the vantage lines are doing on Quailcom here. They've probably already crossed over. No, they're just getting ready to cross over. They haven't crossed over yet. Let's zoom in a little bit on that. Of course, I should practice before I do these videos, but I just do them off the fly. But no, the advantage lines haven't crossed over yet. And then the bulls and bears hasn't put in a red bar. It did put in a red bar here. And one thing that's pretty neat about these bulls and bears is it's got different settings. And really the classic setting is the best, which this is the classic setting. This is the safest because it's slower and it won't paint a red bar as early. So like on this, probably, well, today's bar is still coming in. So this is yellow just because this is today's action. And then at the end of the bar, it might paint this red. It waits till the end of the day to paint it a different color. It's just yellow because it's a neutral bar because it's being traded right now. But anyway, this could turn red tonight. And if it did, matter of fact, this is probably one I'll short in my newsletter tonight. Now here's one of the cool things about this bulls and bears is you can, and I'm just showing you how I do it in my premium newsletter. You can go in here and you can switch this to aggressive, which you're not going to be able to see me do it because it's not on the video. It's over here to the left. But you go aggressive, and see this is already put on a sell signal right here. So this is on a sell signal with aggressive. And the only way I would use aggressive is if you can just see this chart pattern coming in like here, like you're just sure it's a head and shoulders top, which I am sure. You know, as sure as you can be. Again, I always got to throw that in. So I would have taken this, but you know, again, it doesn't hurt to wait for the extra confirmation of the advantage lines and then a red bulls and bears normal. They call it traditional. And then there's traditional setting, there's progressive setting, and then there's aggressive. And you just got to play around with those and see which one you like. I like the aggressive when I'm being aggressive. Now on this, I don't think there's a real big reason to be aggressive on this right now because, you know, it'd probably be better to wait for the neckline break here and the advantage lines to go over. So, you know, you could use either one right now, but I'm going to probably wait for a red bar on traditional. And then I was going to show you a few more stocks, but let's see here. Google, I mentioned yesterday. I said Google's bearish. I wouldn't be long Google. Today's a bearish bar for Google. Michael Kors, this is the one we went short yesterday. We went short right here. Oh boy, I did that wrong. But anyway, we went short right on the break of this bar. And then, you know, it's come up. It's kind of making what it'll do is it'll break out. And then see how this is a, like a support, minor support area here. These two bars, I didn't draw it exactly right. I can pull that down there a little bit. Okay, now see how that broke out through this. This is like a minor support. It broke out through it. Now what this is just probably a test of the breakout. And then tomorrow or the next couple of days I expect to see this broken. So the fact that we got short here and today's kind of a bullish reversal bar, that doesn't worry me at all. I mean, I the way I make these trades is we did the right thing. We got short at the right time, and then I put my stop up here, and then we just let the market play out as it will. I mean, if we get stopped out, we get stopped out. So anyway, that's a wrap up for today. Thanks for listening to my video. I greatly appreciate it. Jim with ProfitTraining.com.